In this video, I talk about another wave 1 technique. This is called the exhaustion flip. This is actually one of the more difficult ones to do. However, if you've been involved in a collection in wave 1 and it's been going well and you've done your flips or you've not managed to get a good entry and then you see a sell-off, but you know the collection quite well, you've been watching it, monitoring it, you've seen it how it moves, this could be an option. And the reason I consider this a strategy in its own right is for the same reason we've been doing some of the others. The ROI is good. It's potentially a good flip. So I'll show you how it works. This is DupeCat. So this is a random collection. So I'm going to show you a couple of collections first where you've seen it happen in real time recently. Like these are literally trending right now. And then we'll have a look at a new collection and see if we can try and find a setup. So basically how it works is in wave 1, as we know, we get this initial pump. Not all collections, obviously, it's only a small percentage of them, but because of the volume going up and the interest and the hype, everything goes up and then we reach a top in wave 1, wherever that might be. And for this one, it happened to be a nice round number of 1 million, which is good. So how the exhaustion flip works is, as I've discussed in other videos, you get people selling first, and then you get more and more people panicking, thinking the price is going down to zero, which obviously a lot of the time it does trend towards zero for most coins. So understandably, they use the word jeeting, but basically in Telegram groups, everybody's selling at the same time and just panic running. So the opposite of diamond hands, sawdust hands. And actually that's a good way to be as a trader, because you don't want to be holding massive bags, which are mostly 90% losses, of course. So once this is down, like this is already down 70-80%, what you can do is do a rebound trade. Now this gave you a couple of opportunities. There was one here at 200 and it was like a 2x flip, but there's a better one here. And see here, we reached a nice round number of 100. And if you bought anywhere around the bottom here and flip, and you're in the position right now, because this is live, it's still kind of consolidating, may go up a little bit more, we don't know. This is a 2x or 3x move here potentially. So this is well worth having a look at. It's just hard. The reason it's hard is where are we going to, it's like catching a falling knife. Where do we know where things are going to turn? So the way I do it, this is actually not typical. The way I do it is I look for sideways motion, as I discussed in one of the other strategies. And then after sideways motion, that's when we look to see if we get confirmation with a pump up. So let's go through it step by step. So let's say we've got a downtrend like this forming already. What I do first is I look left on the chart and I see, let me just zoom out a little bit on this one and let me close this so you can see it a little bit more clearly. I zoom out and I see, are there any previous places where we had resistance, which basically means the price formed a previous peak. And not really, we had like one peak here, but there wasn't a clear one here. So it is difficult. So if we go back to a 1 minute, maybe we can see it a little bit more clearly. Were there any previous like clear peaks that we can say? There was one clearly here. So let's draw a couple of horizontal lines. So there's one clearly around this point, and then there's one about this point. Those were the ones. And you can see on the way down, we kind of got a little bit of bounce of that one, and we got a bit of a bounce of this one. So they're not bad in terms of helping us identify where the positions are, but also round numbers, as I keep talking about. Notice this was exactly on 100, just under. This was just under 100, almost to the dot, and then it bounced aggressively. So you don't need to know the exact value. But if you see price either go sideways at a level or bounce, and then the stairs seem to go in the opposite direction, you start getting higher highs and higher lows, because you're never going to time that. But then you might jump in here about 150, 160. And you don't know how far it's going to go. It might only go up to 200, 250, and then you take profit. But this could keep running. And if you're still in this position, the great thing is we're at 400 here. You don't have to do anything. You just have to watch it go up. And then the other thing you might see around these areas is volume come back in. And we're seeing a little bit more volume come back in as well. But like I said, this is hard because you're trading against the trend now. The prevailing trend since this time here, which was a few hours ago, is down. So the pressure is always down. So you have to be careful. But I've seen some crazy runs here, and I've been involved in some. Like this could, sometimes I've seen ones where they literally drop 90% and then they go back to all-time highs. It's rarer and less likely, but it absolutely does happen and absolutely can happen. So that's what we're keeping an eye on here. Notice that if we draw another resistance line here to the peaks we saw before, if it gets anywhere near here and I was in this, I would be selling before this peak or near this peak. Because I would say with good probability it's going to hit this and go back down. I mean, this is a resistance level where it's at right now as well. But basically it's very easy. You're just drawing lines where we saw peaks. So anywhere you saw a significant peak, you're just drawing a line. And those lines are the only things we can go off, that and the volume. and just how the trend is forming. That's what we can go off. Now, if you want to, you can go in Telegram group as well, see if they've got any new news, like any new listings or any other kind of alpha, you might want to call it. That's fine as well. But let's have a look at a couple of others. This is another one. Again, it's kind of newish. It's only been running for a few hours. It's done its wave one, got to 2.25 million. So again, round-ish number. And then it dropped all the way down here, and we got to around the 500,000 mark. But then from 500,000, it went to 1.5 million, which is a 3x, but it could drop again. So if this does drop again and make a new low, I'm going left. So let me just zoom out a little bit. Might not get, yeah, we got a very clear peak there. You see that? Very clear peak. We're actually approaching that peak right now, but remember, we broke through it before. So if we're going to get fresh lows, we have to find a lower peak, which is a bit tricky to do, or this support level at 230. So for example, if this keeps dropping, and it's got some good liquidity, it's got like nearly 100,000 liquidity, so it's a bigger collection. I haven't researched it fully, obviously, so I need to look through socials and stuff. But if we get some massive drop and we go all the way down to 250, even if it's a dead collection from there, I'll buy it just generally for out of mathematical reasons alone, not because I think it's some amazing collection, but I would buy it there and see if we can get a run up to 750 and do a 3x and then watch it sell off again. That's fine. And if it runs more, it runs more. But if we get a fresh drop and it goes all the way down there, yeah, I would be interested, because even in a downtrend, we move in stairs. In the bigger, decent collections, in the completely crappy collections, it's just going to go down in a straight line. You're never going to get any nice bounces. But in these big collections where there's a lot of people involved, you can get nice bounces. So this is ICR, and I'm showing you this because this is even more live. This literally just launched 45 minutes ago. It hit 700,000. It's called Inverse Creamer. Kind of the narrative at the moment with Wall Street bets, GameStop, stuff like that. So that's why it's a slightly interesting collection. But it looks like it's died off. Doesn't even have its socials here on Dex Screener, so they've not really even invested in that. So it's probably not going anywhere. I won't be surprised if lower volume causes it to sell off more. But I'm looking at this initial peak here. Where is this? 132. So I'm having a quick look at the 132. Now if price comes to the 132 and keeps crashing, that's fine. You just leave it to crash. Like, you don't do anything. But if you notice around 132 or 100, price kind of comes here, kind of just stabilizes, goes sideways, or even slightly lower at the 50 or 20,000. A lot of people, because it's psychology as well, mass psychology, that's what charts are. A lot of other people will be TD, buy the dip. So a lot of other people will be thinking the same thing, so which helps you as well. And then any little bit of volume, you don't need much to move a market when it's at 10,000 market cap. To move it from 300 to 600 is a lot of energy, a lot of people, a lot of investment, a lot of marketing. But if it drops all the way down to 10 or 20, yeah, I would put a little 1-2 soul on there, because yeah, it could easily flip into 6 soul. So it is a really good technique, but I would say reserve this to when you're more experienced, because it's a little bit more shooting in the dark. Whereas initially in this wave one would have been easier. We're now ending wave one. We're trying to catch these exhaustion trades. And that's why I call it exhaustion, because the sellers just get really, really tired. And then you get these nice little rebounds. A lot of the people who cheating, quote unquote, who wanted to sell are out. And then the good thing is when you start back, you can see it's still selling up. But when you start back from 20 and then it goes to 30, what are the people who bought at 20? What is their position like? They're in profit. So if they're in profit, they're more likely to hold. Whereas here on the way down, a lot of people bought high up and they're taking losses. So they're more likely to panic and sell all the way down. So you're just waiting, patiently biding your time. And because it's still a new collection, it's only been running for an hour, it's still interesting. It's still people hopping into it, having a look, seeing what it is all about. So you're still going to get some fresh volume. If this was a day later and there's dead volume for like 6-12 hours, hardly a trade being placed on it, not interested. If you look at the last 5 minutes, still 40,000 in volume. 75,000 volume. That's a lot of volume. So I'm definitely going to have a look. Now, it could bounce before that, but it already bounced from here and struggled back up. So we'll see how it goes. The other thing it could do, by the way, remember, exhaustion, it could be a drop to new lows sideways. It could be a little V shape like I showed you before. The other thing is, if you ever find it dropping, but then going sideways within a range. So let me draw a range here. Whatever the range might be, and it just starts doing that, I'll be keeping an eye on it. That's bullish. Because then at the final end of the range, it starts doing that ascending triangle again. It looks like it's going to break out. Then I want to buy at one of the dips. I don't want to buy right at the top line. Never do that. Buy at the bottom of the range. Or the dips. The good thing about buying at the bottom of the range, if it keeps ranging, is you are very unlikely to lose money on this, because you could literally take profit when it just goes back to the top of the range and then let it just mess about forever in the range. And then if it breaks out, it breaks out. Really good. You're watching it carefully. If it breaks down below the bottom line, you just sell. But because you took profits, 25% when it went back up, you should already be in profit. So even if you sold below the line, you don't have to worry. It could be a dead collection and you're still walking away with a profit. So you see, you kind of protect yourself in that way. So it's either the sideways, you see, just moving sideways at a low and then up, V shape, or you get a range. You get those three things with these exhaustion flips. But it's one where people kind of ignore it. They kind of leave this collection and move on. But if you know the collection kind of quite well, you've been watching it very closely and stuff, there's still a lot of volume and interest. A lot of people looking to maybe buy more at the dips if they're already in it, in the hope that that extra money they buy actually help pump the collection. Use that to your favor. So keep an eye on this when you're more experienced. It can be very, very profitable. Thanks for listening.